So let's jump right back into it, right? So we got a Bitcoin that is basically 50K. In fact, it looks like we hit it to the penny on my Bitstamp chart. We can take a look at obviously what it's doing on the Coinbase one as well here. Let's bring that up. But I guess the question is, do you expect us to see a breakout here, or is this going to be a stall out and reversal?
My views on the market have essentially been that the liquidity from all the altcoins, essentially, it has to flow back to Bitcoin. Well, I guess nothing has to happen, right? But the idea is that Bitcoin will continue to sort of chop the altcoin market up until it has finally broken the altcoin market down. And look, the altcoin market has held up against Bitcoin longer this cycle than it did last cycle. There's no doubt about it. But yeah, I mean, you have the spot ETF flows, right, going into Bitcoin. You also just have the regular people who, sort of the regular DCAers that get into it. But, when you look at days like today and you see Bitcoin pushing 50K and you go look at all Bitcoin pairs, look at them, right? They're mostly just bleeding back to Bitcoin. And that, I think, is ultimately what needs to happen. Is I think Bitcoin will continue this. I mean, I don't know if it's going to get rejected off 50K or not on the first try, but my guess is that it will continue to try until we finally see, ETH Bitcoin break down, until we finally see alt Bitcoin pairs break down.
Do you have any idea, like, what would you say is the reasoning behind the altcoins holding up better? Is it the risk on an atmosphere? Is it the liquidity that's, really we've seen M2 start to uptick again. We've seen the debt, the credit card debt, which is basically people consuming and more liquidity in the system. Is it all kind of tied together?
Yeah, I guess so. I mean, I think there is a lot more liquidity this cycle than there was last cycle. But in other ways, you could view the market. It really isn't that different in some regards. And here's a great example of one that kind of implies that it actually isn't that different. Like, the ETH Bitcoin chart, the monthly candles. If you were to actually just look at how long it has taken ETH Bitcoin, let's say take it from this first high right here until it finally broke down in June of 2019, or really, I guess it was July of 2019. It was about 25 months, right? We're currently on around 26 months, right? So it's really, in that view, it's not that different, right? But it can certainly feel that way. I think one of the reasons it feels that way is because in this cycle over here, the second peak for ETH Bitcoin was basically right when Bitcoin was putting in its all-time high. But the second peak for ETH Bitcoin in this past cycle, it was, well into the bear market, right? I mean, you're talking about it was near the end, it was near the merge, the end of 2022. So that could be one reason why the perception of it is different this time. But I do think that Bitcoin will continue to sort of make these aggressive moves until we see that Bitcoin dominance break out, right? We've been following this forever.
Yeah.
And it's back near the range highs. I mean, again, last cycle we saw Bitcoin go through this exact same type of rally until the Bitcoin dominance retraced to the 0.5 fib retracement, which is all the way up at 56%. And I know some people look at the Bitcoin chart and they would like a larger correction. We've only had we've had 4 20% corrections at this point, basically since 2023 started. And every single one of them has been about 20%, right? Very similar types of moves last cycle, QT late business cycle. The problem is, once the 30% correction came during that move, it actually meant that there was a longer, I think the idea is, right, there's a lot of people that want to quote unquote buy the dip,
Right.
and then they only get these shallow dips, right? They only get 20% dips. So by the time you maybe get a 30% dip and people go in to buy it, it might do some type of 2019 action where it then goes into a downtrend for, half a year or something before continuing the overall move. What do you think, Gareth? I mean, is 50K, is it going to be a formidable milestone, or can Bitcoin get through it?
Yeah, so I think a lot has to do for me is just watching the liquidity in the system and the stock market, right? So it's there's the fact that the S&P is just hitting new highs continually, right? So today there's no volume in the market. We're in a hangover day from the Super Bowl. Volume again in the S&P is probably on pace to be the lightest in the last year. So when you kind of combine that and you look at just the grind up in the market, the insanity, which is like an Nvidia chart that just continues to rally higher. It's a risk on environment. I mean, it just is. And so that's going to money flow is eventually going to say, okay, well, what else is risk on? What should be running during this period? And that's Bitcoin and really alts to some extent. I do think it's kind of interesting that you have a risk on environment which should be really positive for alts, but we're not seeing necessarily new highs versus Bitcoin has just made a new high. I think the last high on the spot news was 49,000 and here we're hitting 50,000. So you do see a little bit more relative strength in something like Bitcoin, which is probably ETF, getting more money flow in there. But yeah, it's an incredible market environment here where liquidity is just flowing. I mean,
Right.
people are willing to take risk, even in spite of interest rates still being relatively good. I mean, you could still find 5% on a CD right now for a short term CD, which historically is not too bad, especially over the last 20 years. But people are still choosing to be in the stock market because that's where these insane gains are.
Right. Well, I mean, as far as it goes with altcoins, I mean, look, as long as Bitcoin goes up, the altcoin market can get pulled up higher, right? I mean,
Yeah.
Bitcoin sort of lifts those up. Sort of the argument that I've made before is tracking Bitcoin and Bitcoin dominance is like, yeah, like altcoins can go up for sure if Bitcoin goes up. The only reason altcoins are going to go up, well, collectively, there's always a few that you could, find some exceptions, but collectively they would go up only after Bitcoin does, right? So if you want to have the strongest horse, it would make sense to have, keep a crypto portfolio, I think, heavier Bitcoin than heavier altcoins until we get back to looser monetary policy. Garrett, a few weeks ago, I think when 2024 started, you mentioned that the S&P would likely rally to 5,000 here at the early part of the year. But
Yeah.
now that we are at 5,000, what comes next? I mean, we've hit that round number. Do you think it can just extend these gains? As I mean, crypto is not really crypto hasn't slowed down yet.
No.
But yeah, what are your thoughts on the
So
S&P?
this is really, really interesting. Is that so you look at this chart and I mean the vertical nature of the S&P is incredible. Just I mean to just put this in perspective, you look at the last time. So we've had 14 weeks out of 15 have been green on the S&P 500. I think there's been two other times in history where that's happened. It was 1957 and I think 1927. So it shows you how rare it is to have such a kind of continual grind up in the market. With the S&P higher today, I think one of the keys that I was shocked by over the weekend is a stat that says that with the S&P at new all-time highs, 39% of the S&P stocks are below their 50 moving average. So think about what that's saying. That's saying that essentially you've just under half of the S&P stocks are underneath their 50 moving average. We're not talking the 20 moving average. We're talking the 50, which is even harder to be below and more bearish for those stocks. And interestingly enough, at the start of the year, 91% of stocks in the S&P were above their 50. So even though the S&P is going higher almost daily and weekly, there's been this underlying degradation in what is essentially the underlying fundamentals of it, right? And so it's in layman's terms, it's basically telling us that the rally is being led by less and less names within the S&P, and it really is. It should be a warning sign. So yes, could we go a little bit higher? But at some point, if that trend continues, it's a trend that is unsustainable.
Well, again, I mean, it's the same thing we saw in crypto, right? Like total market cap of crypto is going up because Bitcoin's going up, right?
Right.
It's not because the altcoins have, gone back to where they were a few weeks ago. It's because Bitcoin is now pushing new yearly highs, and it is
Mhm.
putting a new yearly. This is the chart you were just talking about, Garrett. This is the S&P 500 overlaid with the number of stocks, I guess, with the percentage of stocks in it that are above their 50-day SMA.
Yep.
And so, yeah, I mean, you're right. Like the S&P continues to climb higher, thanks to a few of the larger market cap names. It's actually I think that's one of the reasons why a lot of hedge funds struggle to outperform the S&P is because there are a lot of examples in history where only a few stocks are responsible for a large number, a large percentage of the gains, and it's hard
Yeah.
to it can be hard to sort of pick those stocks out. Whereas the S&P collectively, like the index, it'll have it in there, and so you sort of rely on those few stocks to lift it higher. But you're right. I mean, yeah, you can look at it. The percentage of stocks above their 50-day SMA in the stock market has basically been trending down.
And I think if you look historically, look at how rare that is for that to happen. I mean, it's pretty. I mean, looking at other scenarios where you've seen that divergence, essentially the crocodile, jaws starting to kind of open here with that divergence. And eventually we know what the outcome is. If you look historically, it snaps back shut with either, the lower bunch jumping up, but then the S&P usually coming back down.
Yeah, but again, I mean, I think it's important to remember that those trends can take months
They
to play
can.
out, if not longer. I mean, that's the whole thing with the business cycle, right? Like the business cycle can take years to play out. I think it's easy for us to look at a chart and look at like the 70s and see all the rate hiking cycles and rate cutting cycles and see the S&P, but each of those cycles took years to play out. And I mean, you have to imagine a lot of emotion was tied into every single one of those moves back then.
Yeah, 100%. I couldn't agree more. And so, yeah, it is a remarkable market right now. I think, you look at risk assets and then you have gold right on the other side of the coin, which is, basically just staying stationary at this point, right? And so let me bring up my gold chart here and we can talk a little bit about that. Gold today is lower and we're actually seeing a little bit of a breakdown below this short-term trend line right here, which again, I don't think there's a lot of downside on gold here. I think gold again has shown that it's resilient and staying near these all-time highs, even in spite of a risk-on atmosphere. And for everyone out there watching, remember that when you get the markets hitting new all-time highs, usually gold is selling off because no one wants to be in gold. Why would you be in gold when you could be in stocks? But the mere fact that gold has held up this well in this bull market for the last year and a half is a testament to people still accumulating, including central banks. But short term, you are seeing a little breakdown here. The other thing to just point out, I wanted to just show you guys is take a look at the VIX today. So you have a stock market that's floating up, but you're actually seeing the VIX pop today a little bit. And then there's been this kind of general trend on the VIX that has been making higher highs and higher lows as well. And historically, I think this might have been the last time we kind of saw that over here. You do tend to get pops in that period from that movement. So just something to keep in mind. Again, I think you say it perfectly when you have to say that there's the timing is the hardest thing, right? You can see that the storm clouds are showing, but you don't know, is it next week, next month, or next year, basically.
Right. Yeah. I mean, as far as the S&P goes, I'm pretty much a fairly boring investor. I just sort of DCA into some low expense ratio index funds when,
Yeah.
like on pullbacks and when like risk levels are low. Like back in October when, Yellen issued shorter duration than the market was expecting, we had, we basically had the market essentially recognizing that the Fed had hit the terminal rate, right, of 5.5%, and you had favorable seasonality in Q4 of the pre-election year. That was time for me to say, all right, well, we probably will see stocks rally for a while. And I think it's hard to know exactly when it's going to stop. A lot of times after Fed pauses, the stock market can rally 20, 25%. And it's not like that's actually the median, I think, return on stocks after a Fed pause. So, and by the way, as far as gold goes, we're still, if you look at least last cycle and prior cycles, a lot of times the time when gold really takes off is after QE returns, right? And I think it's because like why QE returns, right? Like if QE is returning because the economy is weak, then people are going to go risk off and pile into risk off assets.
Yeah.
And I mean, you can see that in 2019 essentially is what happened, right? Like QE, rates started to be cut, and that's where gold really started to go higher.
Yeah, and then secondarily, yeah, we basically saw that lasting into COVID, right? The move that ended with the pop that kind of, in late 2020 gold topped out, but that was when the Fed was going gangbusters in terms of, printing money and flooding the system with liquidity, essentially quantitative easing. So no, that's a great point.
Right.
What are your thoughts on obviously looking at Bitcoin itself, but like Ethereum, like how is your viewpoint? Do you there's been a lot of talk that with a potential spot ETF later this year, maybe the Ethereum is the place to be for the next big bull run for Ethereum. Do you have any viewpoints on that?
Well, yeah, I mean, look, my view on ETH is that it can go higher so long as Bitcoin does, but I think that Bitcoin will continue to sort of rule the roost. I think Bitcoin is king, and I don't think Ethereum is going to take it away. If you remember at the spot ETF launch, right, following the spot ETF launch of Bitcoin, a lot of money flowed into ETH, right? I mean, if we remember, look at this ETH Bitcoin rally, right? It rallied up 17% in a single week. And it's effectively given back all of those gains at this point.
It has.
And yes, I agree. Like the spot ETF for Ethereum is likely long-term bullish for ETH, but you have the halving before, between now and then. So if the market really does continue to remain narrative driven, which I mean you could argue that it will be, then while it's possible that ETH gets a relative move against Bitcoin for sure, sometime when that launches or going into the launch, I still have to think, well, we have the halving between now and then, and I think people are going to be more focused on that. And I mean, you can see that it's bleeding back down to the range lows. And by the way, last cycle, ETH Bitcoin finally broke support, right? It finally broke support right as the first rate cut arrived. And so I think that, yes, it's possible that the ETH Bitcoin ratio bounces around in this level. It's not like it has to immediately fall, but I still think the ultimate outcome is for it to break down around the time of the first rate cut. Who knows when that's going to be? As far
Right.
as ETH USD, it's kind of eerily similar to again the last cycle, almost an order of magnitude higher, in fact, right? Like if you look at where ETH USD bottomed out over here, it was around $85, $90. Right here is about $800, $900.
Right.
This rally over here essentially lasted, at least on weekly closes, up to around 300, with a wick up to 350 or so. And I mean, look, Ethereum is already at 2,500. It already made a move to 2,700. If Bitcoin stays risk on for a few more weeks or a few more months, of course it can lift Ethereum higher. It's just does Ethereum go up in a durable fashion relative to Bitcoin or not? And my guess is that it doesn't. My guess is that it underperforms Bitcoin. Like my guess is that when we look back on this period a year from now, while there will have been some bounces, I'm still guessing it eventually breaks durably below 0.049 and likely spends a year or so below 0.049 before likely breaking back up to the upside. I don't know, sometime in 2025 or something. What's your view on ETH? I mean, are you in the camp that it's going to outperform Bitcoin, or do you still think Bitcoin, or what's your views on ETH USD?
Yeah. So again, I think one of the things for me at least is I've been staying much more shorter term in terms of levels. So for instance, you see the parallel lines, and there's something about markets where they stay within these parallels is just absolutely remarkable. But we could see here how you had this high here, and it kind of bubbled against it, finally breaking, and then that became support. We broke up, we came back down, it became support again, and now ETH's moved up. And then you have the high line, which is parallel to this one as well. And we've now just crept above that. So as long as we stay above this line, the probabilities favor us at least moving up to like 2775, which would be the upper trend line, which is again another parallel line. So I would say that again, as long as we stay above 2500, you favor 2775 of being hit. Whether or not it gets through that, I think that's as we get closer to a potential spot ETF, that would be the trigger. If it really is going to get a bid and break through there, it's got to be something different, right?
Yeah.
Something that makes it have that power to bust through that upper trend line up here. But yeah, it's been an amazing mover just in the recent days, kind of following along with Bitcoin. Just looking at a couple of these others, I can take a look at Cardano for people out there. I thought this was interesting. You had this wedge pattern. You can see again, we broke above it right here, and then it's kind of been up. But again, I think it's important to draw the comparison here that you have Bitcoin making new highs in the short term, right? We hit 49, now we're hitting 50 a month later or so. You have Ethereum, which is still underneath, and then you have these secondary tier cryptos, these altcoins that are still really struggling. I mean, they've broken out a lot of them, but some of them haven't. I mean, I was looking at INJ here, which, to be honest, this is actually underneath a significant resistance line right here, right? From this point here to this low, we broke below, and it still hasn't really gotten much of a bid to recapture that. Couple others that are like that as well. Let me just see here. What was another one? I guess you could look at let's take a look at Solana. Solana is an interesting one. So Solana, I have this really long-term trend line going back to October of 2023, and notice how again it just hammered on the line but didn't break down, and it just kind of led into that epic blow off top right here. It then came back and hit it a few times and then broke down, and now look, this was support for all this period. It now becomes resistance. So resistance here pulls back and then right back to that level here at resistance. And we'll see what it does here. But it's interesting to see a lot of these things, except for Bitcoin, that are struggling underneath resistance points. Not to say they can't break out. Like if
Right.
risk on stays, they certainly can. But Bitcoin right now certainly is the leader here.
Well, I think a lot of times, like when people are in crypto for more than just one cycle, like the first cycle, everyone loves altcoins. Second
Right.
cycle, you get really cautious around them. Like, you know that they can pump, but you also know that they can give back all those gains. By your third cycle or so, a lot of people just kind of stick with Bitcoin and maybe some ETH.
Yep.
Because it's just that the altcoins, I mean, look, they can give life-changing gains. I mean, I've definitely made a lot of money on altcoins in the past, but if you're looking for more of like a slow and sort of steady thing, you want to protect the Satoshi valuation of your portfolio, having a large percentage of your portfolio in Bitcoin over, say, altcoins, I think is sort of a long-term winning strategy. Now, if you can do what you do, right, where you take these shorter term trades, then you can sort of flip back and forth. But I still think that, yeah, like Bitcoin. And by the way, I mean, like, look at like ADA Bitcoin is now back down to 1100 sats. And it's kind of like the same thing as like the whole ETH Bitcoin stuff, right? Like, I mean, like,
Mm.
this is a very similar move where you put in a low and then you put in a lower low, right? It's all the same stuff. You then pop back up, and then you put in a higher low, and then you get your final local blow off top. And I mean, it really looks like a really similar type of pattern there, right?
Got
Where
it.
it gets these moves. ADA Bitcoin topped out last cycle, April 2019, about 3-4 months before Fed pivoted. Could it be the same thing? I think it is likely. And so if that happens, what I would be looking at is look to see if these are breaking down. When it goes talking about Ethereum earlier, I think as long as it's above 0.049, then the bias is for it to chase after Bitcoin, right? Like, if as long as you're looking at it and it's a 0.05 handle, then fine. Like, it can chase after Bitcoin. But if it goes below 0.049, I think that really would represent a shift, like a major dynamic, a major market shift in ETH. And the reason is because, I mean, like, I mean, look, that's just what happened. Like, that's just what happens in at least prior cycles, right? And it's hard to know exactly like the sort of the mechanics behind it. We
Mhm.
could argue about like liquidity and all that other stuff, but oftentimes when you see, at least in the last couple of cycles, when we've seen ETH Bitcoin break down there, and when we saw it break down here, that was where the purple line, that was where ETH USD finally took a hit, right? That was after ETH Bitcoin broke down. So again, I think things are okay so long as ETH Bitcoin stays above 0.049. Below 0.049, I think you have to wonder, like, has maybe too much liquidity been sucked out, and then that represents sort of a turning point in the market. But yeah, in the short term, I definitely agree with your views on those alts.
Yeah. So let's turn our attention to we have economic data, right? So every investor should be aware that we got CPI tomorrow, later this week, PPI. We know the Fed has kind of been choreographing second half rate cut, three maybe this year. The market says no, we think March right now, and we think five or six. So the
Right.
question, I guess, is I mean, is there a chance that we start to see an uptick in the CPI data? I mean, what's pushing the Fed? Is the Fed just scared of the 1970s, of a repeat, and that's why they're trying to take this cautionary stance?
I mean, who can blame them, right? I
Yeah.
mean, if you look at headline inflation in the 70s, the first peak, which I know it looks smaller than the current peak, but the way they calculated it back then was actually a lot different than it is now. Um, but if you were to look at this first peak, we came down to around 3%, and then it just reaccelerated,
Yeah.
right? And then we came down to 5%, and then it reaccelerated. So I
Accelerate.
do
Yeah.
think we have to learn our lesson from the prior cycles where the S&P went on to put in new highs, but if you have inflation reaccelerate, that just means you're going to have to hike more, right?
Right.
Imagine how terrible. Imagine the feeling if the Fed cut, say, 50 basis points this year, and then had to raise to 6.5% next year because they didn't go high enough. I mean, let's just get it over with, make sure we're back down to 2%. And as Powell said, then we can go hopefully into another cycle of economic expansion. But yeah, I think that I think the main risk to inflation right now is sort of the energy data, because some of the base effects are no longer favorable when comparing to a year ago. But some of the other effects I think are still quite strong, like in terms of bringing CPI down. And one of those is housing. I mean, if you look at like inflation year over year approximation of contributions per category, you can see that one of the main things that's holding it up is just simply housing, which is
Yeah.
still covering most of the entire of the entire thing. I mean, like the green bar is housing, and then the orange bar is actually the total headline inflation. So housing, I think, will continue to come down. But again, I think, and you also, Gareth, I also wonder. They say they're not politically motivated, and I'd like to believe that, but you do have to wonder, like, are they going to have some pause cutting rates too much the closer they get to the election? And I don't know. There's some people that are sort of speculating that maybe they won't, maybe they won't, maybe they will. I think they'll likely cut at least a couple of times this year, as they've said, but I don't know. I don't know when it's going to come. Maybe May, June. What do you think?
Yeah, I mean, that's kind of where it is right now. It seems like it's May right now is what's on the table. But I think again, like CPI data coming out, and I also think the labor market, right? I mean, the labor market
Right.
last note. Granted, I mean, you could argue that a lot of that was government jobs, but that's been a consistent thing, frankly. But yeah, I think the labor market, if it starts to weaken, it gives them that green light to cut. I think they'll try to head it off and go for that. But yeah, I mean, it's interesting. Part of me does think that you'll see a reacceleration in inflation. And again, I think some of this is already in the cards, meaning like I've been reading articles lately about how in some states a Big Mac meal at McDonald's is now $18. I mean, holy cow, like
Right.
insane. And then I was reading about how there's been, pushback against Taco Bell because, you go eat at Taco Bell. It used to be like, three tacos for $3 kind of thing. And now it's like, I mean, that's like $12 or whatever. And it is a big change. And it's hard to imagine, at least for what the rank and file, the retail consumer out there is feeling is that, does housing, I mean, housing is a huge part of our net worth as a country, but also there's a large portion of the country that's feeling inflation in a whole different way, and you just see this divergence. In fact, one of the points I wanted to make today is that I was doing a lot of research into the Great Depression and the causes of the Great Depression, and it's amazing for those of you out there. I'm not going to get into too many details, but a lot of there's so many similarities. I mean, you have crazy changes in electricity usage, where it became more commonplace in the 20s, the roaring 20s. You had cars started to become a staple. Now a lot of people in the 20s started to get the Model T, and they're in things like that. And then you also had this divergence because of this, the Rockefellers and so forth. Those that could invest in the market made massive wealth, while there was a huge part of the population that were not seeing those gains, that were being affected by prices going up after World War One. And then here we are, where the same sort of things are showcasing. And so it's not to say, unless we talked about this earlier, it's not to say that we're on the verge of a Great Depression, but I do think history is something that I find fascinating because it gives so much insight into human repetition of mistakes, right? Things that
Right.
repeat over and over again. And it's something we should all be aware of.
Yeah, I mean, I think the Fed, I think they've had a pretty easy job so far, especially after their mistake about inflation is transitory. You got to hike rates, you got to keep them higher for longer. As long as unemployment rate's below 4%, I mean, they don't really need, I mean, I don't really,
Right.
there's not a huge need for them to be aggressive in cutting. I think where things could become a little bit, hazy is like what happens if you have inflation kind of reaccelerating, like you mentioned, and the unemployment rate is also starting to go up, right? Like what if the unemployment
Stagflation.
rate, yeah, like what if the unemployment rate hits 4%, but core CPI isn't at their target? And he said as long as it's moving to their target, they'll cut. But what if it's moving away from their target?
Or
And I think
I wonder what if it, like, let's just say it stays here at 3%, give or take, right? If it just
right,
stays here and we see a uptick in unemployment to like 4%, like you're saying, what do they do? Because
right.
obviously if they loosen monetary policy, it probably does reinvigorate the potential for the CPI to start to climb again.
Right, and then today's problem just becomes, next year's problem, right?
Right.
They just sort of kick the can down the road, which I mean, again, they're great at doing, but
Yeah.
I mean, we'll see. Anyways, I guess we should wrap it up. We're
Yeah.
basically at 30 minutes. And guys, if you're not subscribed to Gareth, make sure you do so. We'll be here every Monday, except when I'm not sick, except when I'm sick, which is actually quite frequent. But yeah,
That's all about having kids, buddy. We all
yes.
experience it. It's no fun at all.